Hi, everyone. Welcome to Analyze Your Trade, episode number 25 for February 27th, 2018, here at the new time of 4:30 p.m. Eastern Time. We're going to give this a try and see how it goes. I think this might be better for more people. But if you have any feedback, whether you like it or don't like it, feel free to contact me at TimingResearch.com or reply to any of the Timing Research emails if you have any feedback. But tonight we will be discussing your trade ideas, and over the last few days, about 40 people have submitted up to 5 symbols each. And I put together the list, which you should be seeing on your screen right now while I'm talking. And we're going to go through as many of those as we can today. My name is David Kosmeter. I'm the creator of Timing Research. And I developed this show with Dean Jenkins of Follow Me Trades. And today's his birthday, so happy birthday to Dean. And he is here on his birthday to moderate for us. So I'm going to go ahead and turn it over to him.
All right. Hey, thank you, David. And it's good to be here again. And we got a good panel, and hopefully Neil can join us really soon. And yeah, thanks for the birthday wishes. 56 years young, so it's a good age where I may have accumulated a little bit of wisdom, and I got a little bit of time left to act on it. So thank you. So we got a good panel, and we'll start off by having them introduce themselves in just maybe 1 to 2 minutes about who you are, what your service is, and what your focus is. And we'll start with you, Oliver.
Thanks a lot, Dean, for the intro. Happy birthday also from me. Glad you're hosting this today again. And glad to be back. I'm Oliver Schmalholz. I'm the co-founder and CEO of News Quantified. And what we do is we analyze the news and turn it into actionable signals for US and Canadian equities. And on average, we analyze 5,000 to 10,000 news items a day. That includes anything from the news wires, all the SEC filings, analyst actions, all the earnings, all the market rumors, and we filter through all the noise and give you the actionable ideas you need to know as part of a signal service. And so everything we do always starts with a news event, and we got a huge historic database, over 10 million historic events, and there are setups that have performed consistently in the last 10 plus years with a pretty high accuracy. So excited to show you a little bit of that today. And again, thanks for the invites. Thanks for having me on the panel.
All right, glad to have you here. I think what you're doing is super interesting, and like we've talked before, there may be opportunities to combine that with technical analysis.
I still owe you a call, Dean.
Yeah, I think that was really, really interesting.
Weeks.
All right, Christian, what are you focused on? We're going to take a minute and introduce yourself.
Yes, sir. And happy birthday, happy 42nd birthday, Dean. And thanks very much for having me on, David. So appreciate it. Yeah, so I run the Tribeca Trade Group, and we focus. It's an all-day trading room, and we focus on the most aggressive and the biggest option trades. Really looking for watching the tape all day long, and looking for trade ideas based on what kind of flow comes in. And then we kind of use the flow that we see on the tape. And I use my own proprietary system, as probably many of you do, with a focus on trend trading. I also do this exercise as well on the ETF side, ETF flows, ETF block trades. Take a look really at where the money is gravitating towards. And that helps me spot the trends early on. So my background previously, I was a director at Bank of America Merrill Lynch, and I worked on the Delta One and ETF trading. I was one of the senior ETF traders on that desk. So I made block trade. I made risk prices or put up block trades for your big institutional hedge funds, and I did that in domestic ETFs as well as international fixed income commodity currency, which really gives me a nice focus for what's going on in the world today. A lot of different macro forces, and you know, the beauty about trading ETFs and doing it via options as well is you could really get into any nook and cranny around the globe, and not just equities, but you know, some of the other products, including fixed income. So again, thanks for having me on. Appreciate it.
All right, it's good to be back with you again. And I am Dean Jenkins, founder of FollowMeTrades.com. So I'm a trader, been trading and investing for over 20 years. And my focus is technical trading. And I run a stock advisory service. So I trade stocks and options. I don't day trade. Short-term trade for me is a couple of days. And a typical trade is a couple of weeks, 4 to 6 weeks typically. Swing trader, I like to identify big moves using a combination of Elliott Wave, Ichimoku Cloud, and Dow theory, bring it all together and just really confirm when a next big directional move is coming and identify that on a stock chart or ETF chart, and then typically trade it with options. That's my deal. I run a live trading room for an hour and a half, 4 days a week, and offer educational services and one-on-one mentoring. So Dean Jenkins, Follow Me Trades. All right, well, we got a good list of symbols. We got the first one up here. I don't think I've ever heard of it, haven't ever looked at it. And so I'm excited to check it out. So the first one, this is kind of like speed dating. We're just each going to take a look at the symbol, offer our opinion. It might be thumbs up, might be thumbs down, might be neutral, but just get a quick opinion about what you see on the chart for each of the symbols. And so BMRN, and it is BioMarin Pharmaceuticals. And so, Oliver, using your methods, what do you see here?
Yeah, so we had the last earnings event just a few days ago on the 22nd here. They missed, was a short on the 22nd, and that was in the after-hour session. And let's see here, but only had a 1.18% down move since then. If you compare it to the S&P 500 has been up 1.49%, so pretty narrow spread here. The volume triple the usual, but since then hardly any follow through, so a neutral for us.
Neutral for Oliver. News quantified. Christian, what do you see here on BioMarin Pharma?
Yeah, sure. I'll give you the good and the bad, but I'm probably my rating is going to be the same as an avoid. I would say the good is you got the nice base here, and it's been basing for a long time. So I think one of those names to kind of set an alert on. I see no reason to kind of be in it right now other than it's got some support back here. So I don't hate it. But I think it's definitely one to watch because look at this base. It's really interesting to me, but I would wait for a little bit of confirmation here. I see it's below the 200-day moving average, which is this big, long white line, and it's a pretty flat looking 200-day moving average. So, you know, I see no harm in waiting for this thing to maybe show some signs of life, because it could, who knows? It looks like it could be, I mean, you can't really, I'm not going to try to predict how long this thing is going to base for, but the way it's been going now, it's a year, you know, waiting for this thing for a little bit of confirmation. And a couple of times it seems like it's wanted to get going. It's fallen flat on its face. So I would wait for a clear move, you know, see if this thing can hang above 95 for a while. And then once it gets going above 100, I would be all over it. I think for now, you just set an alert and wait for that alert to go off.
Pretty interesting. So your chart setup is very similar to mine. I'm looking at, you know, when I look at a daily chart, I started about 18 months worth of data. It looks like it's very similar to you. And I'm seeing pretty much the exact same thing. And, you know, I've even got my 200 SMA is the same color as yours. That's funny. And, you know, the last 12 months on this stock, if you were, you know, that looks like a EKG for somebody with AFib, right? It's just completely random, but in a fairly narrow channel, swinging up and down above the 200 moving average and the Ichimoku Cloud. It's really going nowhere. And I'm with you. I wouldn't touch it now because you could have capital tied up forever doing nothing. But if it were to break above those previous highs, then there might be something exciting. So I think we're in agreement. So neutral now, but definitely a watch list item for a break up. I wouldn't take it down, I don't think. So that's BMRN. Interesting. Next up, probably have some more opinions on this, probably some more news, and this is, of course, Tesla.
Yeah. Earnings on the 7th of February. They beat the top line numbers, but production issues continue, especially on the Model 3. So what happened here is took a almost 10% drop here after the earnings event. And you can see that quite frequently that over the next, 1 or 2 main trading session after an earnings event, if one number like the estimate versus the actuals and then the forecast here, if there's a mismatch or if there's some other, like a production issue, some other factor coming in here, you see a overreaction. In our case, we went down, but that's kind of a buying opportunity. Quite frequently, you see reversals. In that case, it's one of our 9 power strategies. If there's a huge opposite reaction from what you typically see, very, very frequently it retraces back to the mean, and that's exactly what we've been seeing here. The low was on Friday at 310, and then we went straight back up now into the 350s. So typical news play. Just gotta watch the direction.
Okay. Christian.
All right. By the way, could you just let me know if you could see my screen? I don't know if I clicked on it the last time, but
yes.
Oh yeah, I guess you did.
When you talk, it comes up, so you're
okay.
Good.
Perfect. All right. Well, I think for a long-term one, this is difficult. Tesla's always been a difficult trade for me. It seems like I just do a bad time timing it. Whenever I seem to get into this name, they seem to talk about production issues and the stock falls. But it seems like it does bounce around a range, and as soon as it gets to the lower range, if you're really good about timing it, and maybe instead of like a long-term trade, a couple week trade right now, I have a trader in my room, one of our moderators, and what he likes to do is every time this thing gets down to either the top of the range or to the bottom of the range, he likes to sell put spreads down here, and he likes to sell call spreads up here once it starts to really move for a couple of days. But I would have to say neutral on this one. It is above the 200-day moving average. It just seems like it just doesn't have the momentum for me right now. So neutral. I would be interested, I guess, if it gets back, if it could actually get above where it stalled out last time, which was a little more than a month ago, and around this 360 range. I think if it gets going, it's got a high short interest, so could definitely trap some of those shorts and could maybe punch out to the highs. But again, I would wait for a little bit of confirmation because it seems like it just keeps bouncing around like a pinball.
Yeah, I'm with you. I subscribe to certain tickers, like Tesla on Seeking Alpha, and I like reading, various perspectives. I'm a technical trader, but I'm always interested to see what the fundamental guys have to say. And what's interesting about Tesla is most of the articles written, and there's a ton of digital ink spilled about Tesla, and most of the writers on Seeking Alpha spend more time writing about, the bulls write about how the bears need to, they don't get it. They need to look to the future, and the bull and the bearish people go, hey, they need to quit drinking the Kool-Aid and go get some fresh air. And you see that in the price. Absolutely see that in the price action, right?
It's a very passionate name, right? People have big, a lot of passion about Tesla. Either way, either direction. I agree. Yeah.
And so, on a daily chart, I'm with you, Christian. I think it's just bouncing around. On the smaller time frame, shorter trades, there may be opportunities, between 10-minute to 60-minute, you may be able to catch some of these swings off the extremes. But daily chart, there's just no setup, there's no pattern, nothing for me there. But it is fun to watch. Next up is Intel. I always like looking at Intel. worked there for a long time. It was a great company. I learned so much. And in my trading room this morning, incidentally, someone asked me, "Do you wish you'd hung on to all your, your stock options and employee stock purchase for Intel?" I go, "No, because it would have sat there for 10 years doing nothing, right? And I could have been doing a lot more with it, and I was. But they've had a little run lately, and a pretty interesting pattern now. But we'll go in order. Oliver, what you got on?
Yeah, we had a great strong buy here on the last earnings on the 25th of January. Let me just pull it up here. We went up over 8% on a general update where the S&P went up 1.14 on almost quadruple the usual volume. I mean, huge 82.9 million shares versus a normal 26.2 the week prior. And pretty much, the same average shares per transaction. And it really triggered again a very nice move here. But we're seeing, if you look at a longer term chart here over the last 3 months, we're again in this $50 area here that we don't seem to be getting out of. Let's see here, that's the 1 year. So that would concern me a little going in this late. It was definitely at the last earnings. It was a great opportunity to jump in. But I would wait for a breakout out of this, $50 range here that we seem to be stuck on.
Okay. And Mr. Fromhertz.
Excellent pronunciation, by the way, on the last name.
All right.
So Intel, I really like. Intel, it had earnings a couple weeks ago, and it seems like it's been a victim of a little bit of bad timing. That earnings came right at the end of January, I believe it was, and had good earnings, popped pretty hard, and then the whole market took everything down. And then today, it's so what we've been seeing in terms of the option flow is just, I would say, the semi sector has been super hot the last 2 weeks, and we've been seeing a lot of call flow in a bunch of different names in the semi space. This is the second name I would top. This one gets the silver medal in terms of option activity. Micron has been the one that's been seeing just a huge amount of option activity. Intel is second, and that's why I give the silver medal for the Olympics theme. But even today, they were going after this was more momentum playing. I think a lot of March calls, some April calls, but they've really kind of put the line in the sand. They bought a couple big blocks of options that went out, I think, to June. When we had the market weakness a couple weeks ago, and the call buyers have just come in and revisited this a couple times. Again, I think a little bit unlucky today. Otherwise, it probably would have broken out today, but the overall market was just so weak today. But I would watch for this. If it happens, my take is if we do have a little bit more overall market weakness the last couple of days, and it kind of backs and fill into this support line, I would buy it personally. And if not, I think it's finally ready to kind of take that next leg higher. And if it doesn't, and if it kind of holds in here a little bit, then I would add to a position. This one is on the list of names is one of the ones that I like the most. Just a lot of things going on here, and the option activity has been a good confirmation.
All right. So it's interesting. I had been working on an earnings strategy, doing some testing and all that kind of stuff, and finally felt pretty confident. And so Intel was my first deployment of my new earnings strategy, and it was a strangle. So these purple lines on my chart, we just went and bought the calls out of the money, bought the puts out of the money, expecting very large volatility in their earnings call, particularly because the perceived chip flaw thing, the vulnerability was on everybody's minds, and there was quite a bit of volatility in the contracts going into the call. So we bought calls, bought puts out of the money, and bam, it popped. It was like, I think, over 10%. And so that experiment worked. We did really well on that. And it closed it before the big drop. So that worked out really, really well. Now we got, then they got caught up in the downdraft of the overall market early February, have rebounded exactly 100%. So they are to the tick up to that previous high. And so if I were to go anywhere, go long, they got to get through that high first. They got to break through that potential resistance. And then I might be interested. It's not my favorite long. It's a little far into the trend. I try to catch the inception as they come out of these channels. But long, if anything, but I'm not super excited about it. All right, next up is CXW. I seem to recognize that name. And I know maybe Oliver, you got the news at your fingertips. I think one of the analysts from a bank said they're just today upgraded Intel and said they're going up $18 more or something like that.
Oh, back to let me go back to Intel here. Let's see. No, there was actually a
Citigroup maybe
downgrade yesterday.
It was Citi today. It was
Citi today, yeah.
Top pick.
Oh, right. yeah. Top picks really don't show up as a upgrade or downgrade. That's a different.
Oh, okay.
Different rating system, yeah.
But you saw that too, Christian.
Oh yeah. There was something in particular that they said on their business.
Yeah, there it is with an 18% upside. Here it is, but since they only call it a top pick and they didn't. It was really a reiterated. They already had a buy on it, so that moved the stock up 0.95% from the time it came out here. Let's see, that was right around the market open.
Yeah, they were saying that the
207% the usual volume.
The sentiment has been pretty negative. Just as you were saying, Dean, that the sentiment with their recent headlines about the security issues, I guess. So they said it's overblown. So they agree with you.
Yeah, I actually worked for Intel. If you guys are old enough, or if you remember when they had the Pentium floating point error back in about '93. I was actually working there when that happened. Very similar issue. I date myself a little bit. CXW, Core Civic. What do we got here? I never heard of this one before.
Yeah, that is it doesn't even have a VWAP. It gotta be thinly. Only 11,300 shares. Let's see here. Yeah, there's all low impact news, medium impact here on the SEC filings. Let's pull that up here. Down 4.5%. Yeah, really no opinion on it. Never heard of the stock either. If you look at the past earnings events, you see, even though they beat a couple times, stock being down the last two earnings events on the event day. So 3 out of 4 in the past year, even though they beat earnings, the stock reacted negatively. And let's look at the volume here. That was on the 14th, so 13 days ago. And here, just 44% higher volume than usual, which is way underperforming typical earnings events where you see triple the volume on average.
Sounds like a company nobody cares about, right?
Nope. And look here at the 162 shares average on per transaction. Right at 1.5 million shares, but now the volume is back to 67%, so no follow through whatsoever.
Well, do you care about it, Christian?
Not so much. I'm familiar with the name. It's a jail stock. It's a name that's in the political headlines that comes up every once in a while. I think just the technicals. I'll be very brief here. I think it looks like a short to me. I think you use the 50-day moving average as your stop for a short. So and maybe put a tighter stop than that, considering that these political headlines that roll out with this stock can really get it to move. But I would say a short with a target all the way down at the low price of $12, $13. And again, keep that stop pretty tight. Looks like right now the 50-day moving average would be a good stop on a short.
All right. You know, so Elliott wave is kind of the core of my analysis, and I combine it with Ichimoku cloud Dow theory to try and catch trends. And when I talk about Elliott wave, you know, I get a fair number of eye rolls, right? People have tried it, or have been exposed to Elliott wave. And, it's too complex, and practitioners can't agree on wave counts, and blah 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 blah. There's a very simple approach to Elliott wave. You look for an impulsive move, you look for a correction to a Fibonacci level, and you look for an extension, continuation of the original trend. It's that simple. But one of the things I think frustrate people when they try to apply Elliott wave is they look at a chart like CXW and try to start doing a wave count. And the hard truth is, there's no wave count here, right? This is a stock that swings from extreme to extreme, right? There's no pattern, there's no order. It is in a downtrend. It's been in a downtrend. Using Dow theory, it's been putting in lower lows, lower highs, lower lows since last April. So it is short. If you were to trade it, you'd go short, but it's been going down for a year. That may end and correct a little bit. So I don't like anything about it. There's my take on it. All right, next up, the dead cat that may bounce or not. Or not. What do you think, Oliver?
Gee, yeah. What do we have?
A bottom? Is there a bottom on GE anywhere?
You were cut off for a moment here. Could you repeat what you were saying, Dean?
Yeah, General Electric. Is there a bottom anywhere in sight on this chart?
No, if you look at, there was a very strong event here. It goes back to last November, on the 13th of November, when they announced that they're going to exit 20 billion of assets, and was down over 9% that day on 7 times the usual volume, 251 million shares. But what's interesting, that we still have more than double the usual volume here, and since then we're down over 30%. So it doesn't seem to stop here. There's just no positive news that's pushing it back up here. So I think pretty late to get into a short, but haven't seen anything that would get me into a long position. But that was a great trigger here. Even if you got in late and you got in by the end of the day, you're sitting on over 20% profits here. So that's a great example how a single event can trigger a lot of follow-on here. When you see those anything over 3 times the usual volume, that's when you should be paying close attention what news event it is, and see if it's a major start of an extended move.
All right. Any bottom in sight there, Christian?
Well, I'll tell you what I would have done. I will go back in time, the hindsight 2020, and I would have. I'm just kidding. I was just saying I was shorted on the break of the 200-day moving average, which I did not do. I'm just kind of messing around. But clearly, this name has been just beaten up underneath the 200-day moving average. It does look like there's some support back here. I am not that bold to take a chance. We had a couple traders play this for a quick day trade yesterday, and I'll kind of draw in. I'll focus in here a little bit. I guess you could kind of say there's a little bit of a hammer here, although it looked like one here. maybe if anybody really wanted to play this, I would say maybe use $14 as your stop. But I'm not about to go cliff diving here, and it just seems like it is in a world of hurt. So I would avoid it. I think if you want to try this for some type of a bounce, use that 14, because if you go all the way back here, you could see there is some support back here, but in a couple of different places. And at some point, maybe the valuation, which I'm not an expert on valuation, but so maybe worth a shot here, just not for me.
It's interesting that the amount of back data you're showing and the pattern you're showing, I switched to a weekly so I could show that same thing. That actually, where you called, here's where I would have gone short. That actually is a perfect Elliott wave setup, right? We had a big impulsive move down, a correction to a Fibonacci zone, and then evidence of the original trend resuming. That would have been a perfect entry. If I'd seen it, I'd have been happy to take it, but I didn't see it. As for today, I actually watch something like this very carefully. I'm looking for clear evidence that this downtrend has ended, which we don't see. It is losing momentum, but I need to see Dow theory, a series of higher highs, higher lows, higher highs. I'd like to see it break the Ichimoku cloud. And if it does that, we could get a retracement to this whole down move, irregardless of fundamentals. It could just simply be short covering, or some short-term traders like you're talking about, your day traders and stuff. What's interesting, and I think it was a show a week or two ago, we were looking at this, and one of the panelists, was more fundamentally focused and said, even at the current price, GE is still overpriced for the value of its assets. If you were to break the company up and sell it, typically after we're getting beat up like this, there would be a premium to just selling off the assets, right? And with GE, said, nope, it's still valued more than the sum of its assets, which is sad, right?
That's crazy, isn't it?
Yeah. I can't validate that, but it's interesting. And that may be why the divestitures aren't getting much traction. Next up, a little happier American story here. Lowe's.
Yeah, if we look at the last couple earnings events here, and next one must be coming up soon here. Let's see, November, yeah, end of the month, I think. Last one was a beat here. Stock went down. Two prior to that were two missed earnings. If you look at the analyst actions here, pretty much nothing going up here on upgrades. So that typically points at the extended move here might be, if you look at the longer chart here, have gone up into the 105 area here, 107, but we're not seeing the positive reaction that you typically see of an analyst upgraded. So I would wait for the next earnings event.
I think it's tomorrow. I think they announced tomorrow. It's probably why it's gone on the list here today.
Right, let me check here.
While you're looking for the date there, what do you think, Christian?
Yeah, and I'm pretty sure I believe it's tomorrow morning that they report. Yes. Well, I will. I'll give you first my opinion. Home Depot and Lowe's. I don't really get it. Home Depot had great earnings, and they just had no momentum to them. So it just seems like this group is, for whatever reason, I don't have an explanation for it, but just seems out of favor. And purely the technicals, and maybe with earnings, maybe it pops here, but I would say right now I don't have any position on in Lowe's, and I don't like the rejection of the value area. So I have what's called value areas on my charts, and basically it's one standard deviation of the previous period. So this is one standard deviation of January's month, and it really gives you some nice support and resistance levels. And it has not been able to get clearly into value. And then also you could see that the purple line on my chart is the 50-day moving average, and it just can't get above the 50-day moving average without any momentum to it. So I would wait for this thing, and who knows, it could be on earnings tomorrow that it pops and there's your confirmation and it gets back in value and back above the 50-day moving average. And then maybe for extra confirmation fires off an MACD crossover. But until then, I would wait again for the price. No reason to kind of rush it for me, and wait for the price to kind of confirm that it has the momentum and wants to hold on here.
So I'm looking at it, and that's, your comments are interesting, and you know, probably no surprise that it can't break the 50. You know, knowing that earnings is coming, we did go right down to the Ichimoku cloud, right down into a Fibonacci retracement zone from this big move. So using my technical analysis, we would take it. We would have to see some evidence of it turning, but we could see another move up under new highs, and earnings may be the big deal. You know, one of our other panelists who's here quite often, John Thomas, he's more fundamentally focused, and he's made the case recently that you know, technology companies have a significant advantage in a rising interest rate environment because they are financed primarily by cash flow, where I think some of these companies like Lowe's and Home Depot's take on a fair amount of debt, if I'm not mistaken. So it could be at a disadvantage. But we'll see how the technicals play out after earnings. If it gets a good pop, there could be onto all-time highs here, but it takes more than just one day's worth of data. And, you know, if it really pops, you maybe miss it, and there wouldn't be enough profit left. So there's watching. It'll be interesting. All right.
Yeah, and conference calls tomorrow at 9 o'clock on the 28th.
Okay. So probably pre-market release, and then they got
pre-market release, and then followed by the conference call at 9.
All right, Raytheon.
RTN.
I think Mr. Trump wants to go buy some missiles, so that should be good news for Raytheon.
Yeah, we had the earnings was a slight miss here. Stock went up. CSC, out of the last 4 earnings events in the past year, 2 have been opposite reactions to what you typically see. The analysts pretty much have a low impact here, and if you look at the biggest news of the past year, you see the biggest gainer is just 3.4%, and the biggest loser is 4.3%. So not huge volatility whenever you have news events and that stock.
All right. Christian, Raytheon.
Yes, sir. RTN. So it seems like it's a theme of some of these names, but I do like this name a lot. I just think it's a little bit extended here. I think if it comes back and rechecks, you know, the last time that it did this, you know, first of all, it had this beautiful breakout above 192, and it's been rising up here. And it seems like whenever it gets a little bit extended, you know, I think Raytheon's a great company. I just would not buy it when it gets a little bit extended, which it's not crazy overbought here. But I would definitely be a buyer if it happens to get into around the 212 region and kind of checks back a little bit. But personally, I wouldn't chase it here.
And I'm with you. You know, I'm a swing trader. I try to catch, you know, a new trend that's forming, a correction if it's beginning, or a continuation. And this is, you know, very mature. It's a beautiful trend, but it's just too extended, too mature. And all my trades, I establish a target, and I can only establish a target, you know, for a new move. I can predict with Fibonacci levels where it's going to retrace to after a big move. I can predict an extension after the correction, but how far will a first trend run? Don't know. And so if I can't project a target and a reward to risk ratio in the trade, I'm not interested in it. So great trend. Someday, if and when it corrects, I might be interested. But for me, for now, it's gone. Micron.
I just wanted to mention too, real fast, for everyone watching, if you want to hear more about Raytheon, Matt Buckley and some of the people who were on yesterday's Crowd Forecast News Show, episode number 171, talked about Raytheon for a bit. I think that was in the individual trade ideas section near the end of the show. So if anyone wants to watch that, you can find that on TimingResearch.com. And like I said, that was yesterday's CFN show.
Okay, good. Hey, before we go to Micron, why don't we take the normal break here and go around and have each person share what their current favorite trade is, right? So we'll interject that, and then we'll get back to the list from the viewers submitted. So Oliver, what's got your attention? What do you like right now for a new entry?
Well, today we had M&K had a earnings event here that had a pretty good reaction. We saw a nice buy here on 14 times the usual volume. Stock popped up almost 16% here. And you can see it wasn't an immediate pop. It took a couple hours here until you got to a peak here at 10.40, but still closed out the day. Really nice. We were up 35% at the peak. So that's a great example on a down day. You know how trading the earnings reaction can be very, very powerful. Then another long here that we triggered was Sky, the American ADRs here, SKYAY. They're pretty much saying no action on the Comcast offer, and stock is up 20%. That happened a little faster, pretty much instantly, so you didn't have a lot of time to get in, but 55% higher volume than the usual ADR volume. So that'll be interesting to see what happens in the next couple days here. And then let's see here on the downside, if you like to short things, AKCA, we like on the short side here, that triggered here at 413 yesterday, and the after hour sessions down 25% since then. There was another earnings event.
Okay, I was kind of watching that M&K. I was looking at the chart as you were talking. I wouldn't mind watching that. I'm not ready for that one yet, but that could take off. That's a pretty cool.
Yeah. And it's often, you know, news events like that trigger a move. That's why we really got to talk about combining what you're doing together with our setups here and see if it's something even more powerful.
Yeah, absolutely. All right, Christian, what do you like?
All right, and I've got two. So just as I said in the beginning, you know, look for trade ideas that where we see aggressive call buying in, and we saw one that was pretty nice today. This was Constellation Brands. You could see to the left. This is Trade Alert, which provides information about the option trades, and you could see STZ, which reported earnings I think about a month and a half ago back here on January 4th, and did not have great earnings. And you know, previously it was in a nice trend. So it is still, you know, managing to stay above the 200-day moving average. So you got a pretty decent dip here, and it looks like it's trying to wake up a little bit. And I think this is nice too, because you know, the momentum names have had just a really nice move the last couple of weeks. You know, a lot of the tech names. So at this point, I'm looking for something a little bit different and a little bit outside. I've been playing a lot of the tech names the last couple weeks, and at this point, I think they're due for a little bit of a rest. So I think Constellation Brands is pretty nice. It does need to, in a perfect world, perfect chart, I would like to see this get above the 50-day moving average, which again I quote a lot. It just gives me a good sense of rather than just the 200-day moving average, but just a good sense if it's reclaiming a previous trend. So it has yet to do that. I do like the fact that I've drawn this downward trend line and it's gone over that. So, mission one accomplished, but mission two, it's got to get above the 50-day moving average. I actually started a position today in it, and we'll wait to kind of add to it once I get the second confirmation that it can get above the 50-day moving average. But yeah, you can see this was pretty chunky stuff. I think this was a total of about 6,000 option contracts, each one going up for about $2 million. So I think this got up to about $6-7 million of option premium. And the other thing that I like about this is they're not buying weeklies or front month, but they're going all the way out to July, and they're buying calls just a little bit above the price and a little bit above that 50-day moving average. So I think it is a compelling trade here. It just needs to do maybe a little bit more work to the upside. So I like that one. And then just real brief.
What's the ticker on Constellation? It's covered up on my screen now.
Oh, sorry. It is STZ, Sam Thomas Zebra.
Thank you.
And the other one that I like is Win. Win, had this crazy move higher, and then we know the story about the CEO leaving, but it's kind of just been sitting here and basing. It's got a nice little MACD crossover, and this is another one that we've been seeing a little bit of aggressive call buying into this consolidation. So again, sitting right below the 50, right at the 50-day moving average. So these are names that you don't have to just jump in today. Maybe wait for a little bit of confirmation that this uptrend is going to be held after this crazy move higher. You could see this version point of control, which is a great place to take profits that it hit. If you kind of zoom out here, you'll see what I'm talking about. You'll see that this is these purple lines show up on my chart. Again, version point of control, great place to take a target, but it's down pretty decently from there. And then you also don't forget about the catalyst this week. So if you're looking to play something, for like a call spread just for this week, they have the Macau gaming numbers come out on the 1st of the month. So I would think people are gambling, but we'll see what the numbers show. If they come out and surprise to the upside, maybe the name gets a bit of a pop.
Right. That's kind of interesting. Well, I'll show two too. So my first one here is Momo, M-O-M-O, and it's a Chinese internet company. And I've talked about Elliott Wave and the fact that I like to look for a big move, then a correction, and then a continuation, and that's exactly what we've got here. So we got long on Momo 32.13. Currently have a stop under this previous low at 30.04. We got a target up over 45.47. So like this one, there's a good reward to risk ratio on it. The pattern meets my criteria. It trades at nice volume, and it's disconnected from the S&P 500 and the Dow and all that, which is kind of nice. I'm off. I think you said kind of the same thing, Christian. Trying to, get outside of that bubble and look for other stuff, and this is one of those for me. So I like Momo long. I don't know. Is my screen sharing? Is it projecting?
Yes, it is. I see it.
Okay, good. And then my other one, earnings coming up tomorrow. It's Valiant, and it's funny if there's one thing that both Republicans and Democrats have agreed on in their narratives is attacking drug companies for their pricing. But that notwithstanding, Valiant had a nice pop. We traded that pop, and that was fun, and we made some good money on it. It is perfect retracement into a Fibonacci zone, and we look like we could take another run up, 25 to 30 bucks. But of course, we got to get through earnings tomorrow and see how that goes. Yeah, I'm kind of liking stocking a long on Valiant after earnings if there's still some good profit left and if it breaks out a little bit. So Momo long, Valiant long. are my current picks. All right, back to the viewers list and Micron. It looks nearly like Intel, very similar. Huh? Oliver, you were talking about Micron.
Yeah. What I like here is we had let's see, yesterday they had a product announcement here, Mobile 3D, NA&D solutions for flagship smartphones, and the stock did go up 3.18% yesterday off of that news, and so that is kind of encouraging here. A little light on the volume here. But it's a pretty good reaction for a product announcement. So I like what I'm seeing here, but again, I would wait for the next earnings.
Okay. Christian, I'll bet you're going to say the same thing I am, but you can say it first.
Well, we'll say I mentioned Micron in the beginning when we were talking about Intel. I said this one has been seeing just a enormous amount of call activity, and this started with the day that we bounced, the overall markets bounced on the 200-day moving average, and they just have not kind of quit it with Micron. So I am long this name. I'm in some January. I'm all the way out to January options. I've taken some off here on this move up, and right now I'm just kind of sticking with the trend, and I have a trailing stop, and we're getting close to that 52-week high, which is probably where I will take a little bit more off, and then see what it does. And then, if it starts to back away like it's done previously, this one, I don't think it had earnings that caused this move down, but just kind of cognizant of that. And I think a good place to take a target at the 52-week high. And then I'm really messing with house money with this trade right now. And maybe I'll do something like I'll roll it out, or maybe I'll sell a little bit of front. So I'll probably manage it a little bit if it does continue to maybe show one or two more green bars there, which I really like right now. Notice on the RSI, it's not overbought yet, or it's not even above a 70 on the RSI. So I'm hoping that it's got a little bit more juice to go. The other thing that I notice here is, look at the stock in a down tape, which I think is very, very positive, up 1.25% on a day when everything got spanked today. So it's got some nice strength to it, and that makes me gives me a nice warm and fuzzy feeling to stay in this stock for a little bit longer. But just kind of keep an eye on it. And then, like I said, I've got January options. I'll probably do some type of management once we get to the, hopefully, I don't want to say when, but if we get to that 52-week high.
Yeah, I like everything you said. And, I think I like your entry back when you took it. I think it's a little late to try and get in now, particularly coming up to the 52, up to that previous high. A little late to try and take an entry on this right now for me. If it actually breaks that, then it could be, a lot more to go. If it can break through that previous high. But no entry for me at this time. Costco. That's not a very pretty chart. What do you think of Costco?
No, especially if you look at the beginning of the month here, when the S&P tanked. I think, it was on the 5th of February here. They were upgraded by an analyst here, and the stock still managed to drop more than the S&P on 56% higher volume. So definitely wouldn't go long at this point.
Okay. Christian?
Yes. Other than the Kirkland gigantic vodka bottles that you could get for discount, I'm neutral on the stock. I think right now it's a little bit of a mess. It's a great name, I think, to play on a major dip, but for me, it's a pass right now, or neutral.
Most people are surprised when I tell them that Kirkland is actually a town in Washington. where Costco's headquartered.
So what came first, the brand, or did they call the brand after the town?
No, the town's been there forever.
Okay.
And, I guess there was a bit of a lack of imagination. What's our house brand? Kirkland. But I agree. It's a messy chart. There's nothing there for me. It's a great company, a super well-managed company. And, they got their niche and they do it really, really well. But there's, from a technical trader standpoint, there's nothing there for me. Can't do much with it. CMG.
CMG, had big earnings. The two biggest, if you look at the past year, the two biggest news events were both earnings events, down 13% on one, down 12% on the other. That was Q4 and Q3 here.
Didn't they just get a new CEO, a guy from Taco Bell or something?
Yeah. Let's see here.
And that may be the pop we're seeing right now, right?
Right. Here, there was on the 13th, there was the meal kit industry isn't dead. That was actually a New York Times article here. And that followed, on the 13th, up 27% since then, on more than double the volume on that day, 117% since then. Seems to be some life in Chipotle.
All right. What do you think, Christian?
Yeah, sure. So this also got an upgrade this morning by Baird, and we looked at this name in the trading room, and I'll say exactly what I said this morning pre-market. I said this is setting up for a nice day trade. I just, I'll go back. So this is the 5-minute chart, and so I thought this set up pretty well, but man, today was such a difficult day just all around. I just can't believe this name too, which I did not day trade this name. But I just can't believe that this thing went up to 330, and then just got crushed after right when the Powell testimony started. So I mean, you're kidding me. 330 down to 317. Initially moved higher on that move, but I guess if you day traded, you had to be really quick with that thing. This morning. But I think, a lot of names that are kind of getting close to the 200-day moving average, I like to wait for that confirmation because it really gives me a sense of where I can, where the trade's not going to work for me. So as I mentioned in the morning in our trading room, I said, I'm personally waiting for this thing to get back above, which I know is a far away price, which is 341, which is the 200-day moving average. So I'm a spectator really until that takes place. Yeah, I think it's a positive that they have a new CEO. Maybe they can get some new variety of salsas. Salsas. Maybe I don't know. I mean, I'm personally like I'll go to Chipotle every once in a while, but it's kind of boring. I mean, I live in New York City, and there's just a lot of variety. I'm surprised that they just haven't changed their menu much. So maybe this new guy can provide a catalyst. But for now, I'm a spectator. I would love to get into the name if it gets above that white line, the 200-day moving average, and then I know where my stop is if it doesn't work. So that's it for me for this one.
It's got to be the safest place in the country to go eat, right? They've had a couple of big high-profile, salmonella or whatever things. You got to believe they're just, paranoid to the extreme. It's got to be the safest place to eat.
That's a good point.
And I'm with you on the 200. I wouldn't trade it below there, but if it can break it, that can be a pretty powerful support level. Previous resistance can become support, and it means something new is happening, something different. We're now in an uptrend after a devastating downtrend. So even if you look at the last time it broke the 200, that was not a bad pop, right? Back in last spring. So I'm a spectator with you until it breaks, and sounds like we might be in this together if it does. All right. Well, hey, we're just about out of time.
Yeah, you guys want to do one from the audience real fast before we quit?
Yes.
Alibaba. We haven't talked about that one in a few weeks. BABA is the symbol.
Yeah. What's funny for me, I'll go first. Alibaba looks pretty similar to the S&P 500, actually. You know, January is a little different, but, you know, the last 4 weeks of trading, it looks exactly like the S&P 500. How interesting is that? And so my take on BABA is the same as the S&P 500 is it's at a key decision point and untradeable, but when it breaks, it'll be big either way. That's my take. But Oliver?
Yeah, the last earnings event, if we look at, we had an opposite reaction. And the volume 240%, so a little less than typical earnings events, went down 4%, since then down 5.89%. I see the same thing here, very directional to the S&P, just, you know, a little over 2x what you're seeing on the S&P on a percentage basis, and pretty much, yeah, moves in line.
And Christian, last one, Alibaba.
Yeah, sure. I think I'm unmuted. Am I unmuted? Yes,
Yeah,
I'm unmuted. Okay, good. Yeah, this is a name that I traffic in quite a bit. I know a lot of traders who are trading this in the room, and I mean, we actually spent a lot of time on this today. It seems to have a little bit of a reversal bar, and again, I use the value areas quite a bit. I think this is a great name to buy in a little bit of weakness. If we happen to get, you know, maybe one more red bar on the 50-day moving average, I think it could kind of set up for a scalp. So it's kind of caught in, you know, I'm a little bit neutral the stock on a day-to-day right now, and I shift on a day-to-day basis. But if we get a little bit more downside, the options are for this week are actually elevated because JD.com reports at the end of the week. So that might provide a little bit of a catalyst, and I'm actually hoping that this thing comes in the next couple days, and then maybe might end up being a nice little play when JD comes out. But I'm hoping it comes down a little bit further.
All right. Well, hey, we got to go ahead and wrap it up. We're out of time, and so we'll go once around the room, just any kind of closing thoughts. And if you got a website or a link or something you'd like to share with folks watching, this would be the time to do that. So Oliver, if you'd do a little wrap up.
Sure. Yeah, the recent volatility has opened some great opportunities in the news space. So you typically see a little different behavior and reaction, stronger one-day moves, and then really decision time if it's going to last, if it triggered a new direction, if it extends a existing move, or if it's just a retracement to the mean. So you got to trade the high volatility at times a little different than the boring low volatility time we had before that, but great opportunities every single day, both on the long and on the short side. I personally like to play the delta between the outperformers on the long side and the outperformers on the short side, so it doesn't matter if the Dow goes up 300 points or goes down 300 points. If you want to join our Movers and Shakers newsletter, go to blog.newsquantified.com. We share one idea a day, and no charge. Just sign up, and we do webinars every other week. So would love to talk to you more. And again, thanks for having me. Much appreciated, and happy trading, everybody.
All right. Thanks, Oliver. Good to be on with you again. And Christian, a quick wrap up for you.
Yeah, sure. And I'll echo Oliver's statements just about the market volatility. Certainly, we're experiencing something or an environment that has been very different than, very, very different than 2017. And, you kind of go back and it seems like we've as traders, we've lost our muscle memory of what it's like to trade with a little bit more volatility, which, as we can see with the VIX creeping back up again today and closing on the highs, it sounds like we're not out of the woods with volatility. But the nice thing about being retail, I know a lot of times you hear negative things about being an institution in trading versus a retail trader. And believe it or not, I think the retail trader has a lot of advantages. You're not managing a fund that has, a different type of philosophy that you have to stick to. In this market, just as what Oliver was said, my bread and butter is swing trading, but hey, I'll tone down my swing trading positions when there's higher volatility, and I'll put on my day trading hat. So as long as you're flexible and kind of have an open mind in this market, there are some good opportunities. You just have to be a little bit flexible and just kind of realize what type of market that we're in right now. And you could do a little bit of the swing trading. You could do a little bit of day trading. If you're more comfortable just day trading right now, this is probably the market for you. We just haven't had this volatility. So I think a lot of people who are day traders or their specialty is day trading are loving the price swings right now. And then you don't even have to go home with risk at the end of the day. So and you can switch around. Like I said, as a retail investor, you don't have to say, hey, I'm only going to do this, and this is what my mandate is. So you definitely have an advantage over the institutions that are kind of stuck to a particular mandate. So I just wanted to share that about the overall market. And we have you can go to TribecaTradeGroup.com. We have a trial. You can see what we do on a daily basis in our trading room and in our pre-market commentary, midday commentary, and you could check it out for free for 2 weeks. And that's TribecaTradeGroup.com. Thank you again for having me on. Pleasure to be on with you again, Dean, as well. Happy birthday.
Right. Same. Thank you very much. And I like your comment, that, as retail traders, we're free to kind of do what we want, right? And, within our trading philosophy and our system. And, I guess I kind of smile and chafe at the same time when I hear all the, the financial news talking heads and the market drops and they gasp and wring their hands like it's a bad thing, right? It's like, no, these are opportunities, man. And, I would hate to be in a position where I could see these opportunities and not be able to capitalize because I was constrained by, the prospectus or regulatory things or whatever. So there's some fun trading here. So I'm Dean Jenkins. Follow Me Trades is my website showing, and great way to get to know me and find out more. You can come check out the website. I got a bunch of information and all that stuff. And free newsletter. You can sign up a weekly market analysis where I talk about S&P 500, gold, oil, and some overall trends and sector things going on. So you can sign up for free. Get that newsletter and check it out. I'd love to have you do that. Well, that's it. Great to be here with you guys. Thanks, David, for pulling it together, and turn it all over back to you.
All right. Thanks, guys. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us next week. Crowd Forecast News. That show will be... that'll be March 5th, Monday, 1 p.m. Eastern Time. Todd from Schaefer's Research will be a first-time guest on that show. And then join us for the next episode of this show, Analyze Your Trade, on March 6th, Tuesday at the new time, 4:30 p.m. Eastern Time. So hope everyone's enjoying the new time. And if you have any feedback on that, let me know. And just want to thank all my guests from this week. Neil Batho wasn't able to join us, so we'll try to have him back soon. And thank you to Oliver Schmalholz of newsquantified.com and for being here, and Christian Fromhertz of TribecaTradeGroup.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thanks, David.
Thanks.